Guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about that goal. The goal of $100 a day. Is it achievable? What do you need to get started? How do you do it? How much money do you need invested in trading to make that amount? So I hope you guys all enjoy it. If you do, smash that like button, subscribe. But if you guys want to learn more about trading, swing trading, day trading, check out our school. It's fantastic. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. It's not a get rich quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years. So click that link, sign up, and you guys can get 50% off by using code LEARN. Code LEARN, 50% off, only 5 spots left for that code. So if you want to sign up and invest in yourself, check it out down below. And let's have a quick word from the best broker of all time, which is Moomoo. I know a lot of you are just getting started with investing, and one app that I've been using is called Moomoo. It's super beginner friendly, but still gives you pro level tools like live market data, easy to read charts, and news all in one place. And the best part, new users can get up to 60 free stocks when you open up an account with qualifying deposit. And honestly, that's actually why I tried it. And I've been using it ever since. Check out the link down below if you guys are curious. I've been using Moomoo for over 7 years. I absolutely love them, and I would never recommend a product or something that I don't use. So check it out down below. They're great. I highly recommend them. But enough with that. Let's dive into this. So this is a very common question that I get asked as a trader, especially somebody that posts on YouTube and TikTok quite often is, Carter, I want to make $100 a day. That is my goal. Maybe I have a 9-to-5 job. Maybe I have this or that takes time throughout my day. What's the best approach? So for me, I think most of you are better off swing trading. There's 2 types of traders in the stock market. There's day traders, which is buying and selling during the same trading day. And there's swing traders where you buy a position, you hold it for more than a day, but less than a year. And on average, I hold my swing trades for about 6 to 9 days. The reason I like swing trading is because it gives you more flexibility with your job, your career, or any other responsibilities. Like I just had my first kid, but I'm still able to trade in the market, even though his sleep schedule is crazy. So it gives me freedom and flexibility, which is good. But just like any other job career, like a doctor, lawyer, or engineer, it does take years of practice, of hard work and education before you start seeing money. So here's the best approach. If you're watching this video today and you're like, Carter, my goal is $100 a day. Okay. If you're a brand new trader, understand that this is probably a 2-year process, a year of learning, learning, education, paper trading, figuring out what type of trader you are, indicators that work well, building your checklist, all that stuff. Yes, my school will help cut down on this learning time, but more importantly, it requires work from you. I'm sorry, but I'm not going to be, trading for you. So it's all up to you. And honestly, you are the result of your actions. If you're somebody that doesn't invest time into learning and then you get mad that you're not profitable, well, yeah, it makes sense. So you got to understand that. The next thing here is having these unrealistic expectations with your account. Everybody loves to fund an account with, let's just say, $5,000, and they expect to make $100 a day. I'm sorry to say that that's probably not going to be the case. You do have to have a little bit of a larger account, in my opinion, about $12,000+ before you start seeing those $100 days consistently. Here's the best mindset. If you make 3% per month, you're in the top 5% of all traders in the entire world. So with a $100 account, you're making $3 a month. You're probably looking at your account going, oh my gosh, I am never going to be profitable, or I'm never going to make it, or I'm never going to do this or that. But hey, you're in the top of all traders in the world. So you got to understand that, 1, trading requires discipline. 2, it requires education. 3, it requires consistency. Those $3 returns might not seem like a lot, but as you compound your account, things add up very, very, very quick, because now if you make 3%, that next month you're making 3% on $103, right? So it does snowball quite quick. So let's kind of talk about a trade that we took this past week that worked out very well. And the biggest thing that I want to kind of talk to you guys about is, if this strategy doesn't work well for you, that is completely fine. If you like a couple of things from it, that is completely fine. That's what you need to focus on, is just learning and building your approach. So, all right, let's jump into this. So, like I said, the broker I used is Moomoo. I'll put a link to them down below where you guys can sign up. You can get up to like 60 free stocks, fund it with $100 and start, messing around, learning, all that stuff. All right. So the first thing I look for when establishing should I buy, because that's the main question everybody has, is should I buy this stock? Okay. The first thing you need to look for is trends. So you can see we have a nice upward trend. Pretty much the stock has gone from $4 all the way up to 32, sold off, but it still has that buying pressure, which we look for. Okay, the next thing I look at are going to be the indicators called moving average lines. Moving average lines are trend indicators, so you can look at this and understand that this stock was once kind of selling off down here. You can see that down, and then it went flat and then back up. Okay, so possible reversal, possible, a couple of things. But more importantly, what they act as is support lines where a stock has natural tendencies of getting buying pressure, and they'll act as resistance. So you guys can see in the past when the stock is below these moving average lines, you can see it hits them and we have selling pressure, right? But when it's above them, it's very common for them to hit them and get buying pressure. Now, you'll notice that we have three lines. We have the yellow, the blue, and the red. So the yellow is the 50, the blue is the 90, and the red is the 200 day. So these are just different moving average types. So the 200 is going to be the hardest support, hardest resistance. The 90 is going to be medium, and the 50 is going to be, honestly, kind of not as strong as the 90. But they still work relatively well, as you guys can see here, where it hits them right a couple of times. We get buying pressure. Okay, so after that, I use another indicator by the name of the RSI, which stands for the Relative Strength Index. At the time here, the stock was trading for about a 30 on the RSI. Historically, anything under 40 is an undervalued point to buy or possibly buy this stock. Now, it's also important to look back at previous history with that RSI. So as we go back, you guys can see the last time it was trading for 30 was back in this range right here. And what happened right after it hit that? We had a great move of buying pressure. So after that here, let's kind of recap here real quick. We have a stock on an upward trend, sold off down to that 200-day moving average line, which is a heavy support for the stock. It's undervalued right on that RSI. And before I move on, this is why I know there's support in the past, is because you can see it hits it once, twice, 3 times, and we've gotten buying pressure there. So it's important to make sure there's previous history of support as well. So after that, we go to a lower time frame. So right now we're on the daily time frame. So each candlestick represents 1 day of trading. Now, often the higher up you go, right? So if you're trading on the quarterly candles, you're going to be holding positions a lot longer than somebody on the daily candle. Most of the time. Understand that most of the time. So after that, we go down to the hourly. So going down to the hourly is a very, very important step here with this. So you can see that this stock here honestly was just selling off. Okay, you can see it kind of was riding that trend line down. We'll go ahead and change the color on this so you can see it a little better. But you can see it was just riding down this trend. So what we did is we threw an alert right above this, right above the current trend line. So right in here. So when that stock popped up above it, we got notified for a possible entry. And honestly, as a trader, you'll never be able to buy at the peak bottom and sell at the peak top. It's very difficult to do so because it throws your risk out the window, essentially. So the thought process was this here. I'll go ahead and show you. Entering, by the time we entered, was near around the 2150 mark. So honestly, it really wasn't even like the best fill of the day or anything. We set our stop loss below, roughly below these lower wicks down here, below like $20 for a possible push up to resistance, which at the time, resistance wasn't even right. It wasn't up here at 29. It was up here at about $25. So essentially, that gives a risk and reward of about 4 to 1. So meaning I'm risking $1 to make $4, which actually is a really, really, really good risk versus reward, because essentially you could be wrong almost 4 times and still make money off these types of trades over the course of a year. So now, as this stock popped up, you guys will notice it formed that new trend line. Continue to rally its way up, up, and up. Now, you guys will also notice it formed that trend line. We kept our stop loss just below it. So now as the stock popped up, we started covering profit actually yesterday. Started thinning out some of our shares. We thinned out some before the CPI report, and then some that next day after, as this thing squeezed up 15%. We made literally over $2,000 from trading this stock, which is absolutely fantastic. And so now we're just continuing to hold a couple of positions with this trade to see if we can get more buying pressure out of it. But great return, textbook trade, basic breakout, using moving average lines, basic support lines, and more importantly, just being confident and understanding what we're doing. So I hope you guys all enjoyed it. If you did, smash that like button, subscribe, and we'll see you guys in the next one. Like, follow, and I hope you guys have a great rest of your day. Take care.